Hello and welcome to Retirement Today. My name is Jenna Carnes, owner and financial advisor from Beacon Wealth Advisory. And we're here to help get you to and through retirement with financial peace of mind. If you'd like to listen to this podcast or any of our past podcasts, you can go out and subscribe to our YouTube channel, which is Beacon Wealth Advisory. And all of our past videos are on there, and we'll notify you on any new videos if you hit subscribe. If you'd rather listen to the podcast, you can also go out to Apple Podcasts, Amazon Music, and Spotify. And if there's anything you have questions on today, or you'd like to schedule a complimentary consultation, you can give our office a call anytime at 1-800-994-8993. Again, that's 1-800-994-8993. Well, we're going to get started. Right now, I know for those of you that have been watching the news, the markets feel somewhat fragile. Headlines move prices, it seems like, in seconds. We've got this Iran crisis, oil surges, stock pullbacks, gold flickers, just a lot of uncertainty and hesitation. And somewhere behind all of it, the geopolitics, uncertainty, and the quiet question that I think a lot of investors are asking is, what happens next? And so I know a lot of you see a new face with us today. I am very happy to have Lisa Schreiber, one of the best portfolio managers on our investment team, Gradient Investments here. She has spent years navigating moments like this. And so I'm really glad she's here. For those of you that have come out to our Women, Wine, and Wealth events, you may remember having a glass of wine and listening to her speak. Lisa, thanks so much for joining us today.
Thank you so much for having me, Jenna. First time on your podcast. I'm excited.
Yes, thank you so much. And for those of you that are listening, you probably hear this beautiful Austrian accent that she has. You'll love to hear it all throughout the show. But Lisa, before we get started, can you talk to us about your journey from Austria to the United States and just a little background on you so our listeners know?
Yeah, definitely. So I moved to the US, to Minnesota. I live in Minnesota 4 years ago together with my husband. So he was transferred by his employer. He had a job opportunity coming up, and I was the plus one. I was in for the adventure. And I was in the financial sector back in Austria as well for investments and portfolio managing. So I moved over here, and then I worked for Gradient Investments for a little over 3 years. I started as an investment analyst, and now I'm an associate portfolio manager. And we live in uptown Minneapolis. I'm the only one from the team. So I say always I'm the city girl of the team. All the others are living more on the countryside of the team.
Yeah.
We have a cat called Sir Edmund Ferguson. So I think that's a nice thing to know. Little weird name. But we enjoy it. It's great to be in Minnesota, all the outdoors and all of that, except winters, you have to get through these. Great to be at Gradient Investments for over 3 years now. And to also get around it sometimes for Women and Wealth events. I was at yours a little bit ago, so always excited to do that or join a podcast as well.
Yes, thank you. And I think when you were in Austria, you were like a private wealth manager too for very high net worth clients, if I remember, and also helped on the insurance side too, right?
Exactly. So I was working for a regional bank, and I was an advisor for high net worth clients, portfolio management, but also insurance consultation of the team. And we were specialized on doctors, vets, and more lawyers. So that was more our focus of clients back then. Correct.
Yes, wonderful. And nowadays you can be seen on Bloomberg and Reuters, and gosh, you've been on I think Fox Business, just all different types of media outlets. So You are truly one of the voices of gradient investments. And like I said, just a beautiful, beautiful voice. So we are just so happy that you're here again. And so let's get started. There's a lot to talk about with the market right now, right?
Yep. There's no shortage of things to talk about.
Yes, yes. And I wanted to bring you on, Lisa, primarily because I have had a lot of clients asking, how is this Iran crisis affecting the economy and the market? And there are some uncertainties right now. And I think some investors can be feeling a bit emotional about everything, right? And I mean, that's pretty justified, right?
Mhm. Definitely. I mean, it's human, like markets are psychology at the end of the day, right? And we are all
Right.
having uncertainties and concerns. And there's definitely, like you said, no shortage this year. I mean, we have a
Mhm.
conflict in the Middle East. We have AI, artificial intelligence, that was still, is still a big theme and what happens there. We have high oil prices. We all felt that at the gas pump lately, right?
Yeah,
That is
yeah,
a huge concern. That does a lot for how people are feeling at the moment, right? And we had some market volatility as well, where investors might ask, "Hey, what is happening there? Is it an opportunity? Is it something worse?" So, what I always like to tell is, well, we always hear the headlines, hear the news. They usually paint an even more doom and gloom picture than what it
yes,
actually is at the end of the day. So what
yeah,
I always like to tell is like, hey, let's zoom out a little bit and get a little bit of a high level overview of what's going on, right? And at the end of the day, it's the economy and businesses are driving stock markets at the end of the day. And that's a mantra that we are, saying again and again, but that's what it is at the end of the day. And when we look at the data, it's like, hey, GDP growth, overall US economic growth is expected to grow right around long-term averages.
right.
Inflation, we have some pressures there, especially from oil, and I'm sure we're talking about this in a little bit.
Yes.
But still very resilient. Labor market is resilient. US businesses are expected to grow again double digits this year, which is far above long-term averages. So overall, we are in a very healthy spot. And I think this is what we have to kind of remind ourselves as we hear a lot of those concerns, because at the end of the day there is concerns every single year, right, Jenna? I mean, you are in this
Oh,
business for so many years. Can you remember
yeah.
one single day where we had nothing to talk about?
No, I can't. And, I like what you said too about the news because, I mean, their job really is to sell headlines. And so fear, unfortunately, does get people sometimes to watch the news. So I think it's not fear of what is happening, it's fear of what might happen, especially when those headlines are coming in so strong on the news. Don't you think?
Yeah, definitely. I mean, it's a lot of uncertainty out there. But especially, and it seems a little bit counterintuitive because when you looked at markets lately, well, we are doing great, right? This year we just hit another
Right.
new all-time high in the S&P 500 yesterday, and we are still having a conflict in the Middle East that is not resolved, right?
Yeah.
Still a lot of questions about oil. The Strait of Hormuz, for example, we will probably talk about in a little bit, is still
Yes.
closed, right? So we have a lot of concerns out there that seem to be not resolved yet the market seems to be doing fine at the moment. And that is usually, counterintuitive, and it's tough to look through it. But when we look at history as a guide, again, history doesn't necessarily repeat, but it rhymes. So it's always good to take a look at that. Then we see, okay, stock markets usually tend to be more volatile around breakouts of conflicts, uncertainty. Markets does not like uncertainty, right? Because that's usually
Hmm.
a negative impact immediately. But after a couple of weeks, markets, seem to look through that when there's a little bit more clarity going on, when we have a little bit more clarity of what actually the impact on businesses and the economies are, and tends to usually rebound before the conflict is actually over. And again, that's what we are seeing right now, right? So a lot of
Yes.
uncertainty still, but yeah, at the moment it looks a little bit more positive, and the market seems to be happy with good enough news.
Yeah, exactly. I think the market is just very hungry for any type of positive news, and just even them talking and coming to the table has, I think, made the market a little more optimistic, don't you think?
Definitely. Yeah. Like you said, at the moment, it looks more like, okay, they're sitting at a table, they're discussing. So at least it looks like more to moving towards a resolution, even though we do not know when that happens so yet, rather than a further escalation. And I think that's enough to keep us going, and that's enough to keep us hopeful that this will soon come to an end and that we can move on.
Yes. Yes, we are having faith that that will happen. I think the pulse of the crisis really leads back to oil. It has been kind of the heartbeat of the situation. I was listening to the radio this morning, Lisa, and you probably know this already, but like 5% of oil globally comes from Iran, but the bigger issue is 20% is transported through that Strait of Hormuz. And it doesn't officially seem like that's been open, at least as of this morning. And so, because they have to really find different ways to transport that, it's really jacking those oil prices up. I think by, I want to say 9% oil has gone up, I heard this morning. And so, if we can't get that figured out pretty soon, I think that that could definitely not only affect the US economy, but the global economy. I think 34% of fertilizer also gets transported, I heard, through that strait. And so that could really have an impact on the economy if we can't get that opened up, right?
Yeah, definitely. Like you said, a fifth of the daily global oil consumption is moving through the Strait of Hormuz, and there is not really a whole lot of other ways that we can transport that. And
Right.
the northern border of that strait is all Iran, so Iran kind of blocks that at the moment. Um,
Mm-hmm.
and all of the oil supply from the whole Gulf region cannot pass. A
Mm-hmm.
fifth does not sound a whole lot at the moment, but this is daily, right? This is about 20 million
Right.
barrels of oil daily that are just
A
missing in
lot.
the world economy. And when we
Yeah.
think about it, we saw it with oil prices, right? I mean, and I think that is actually the wild card for markets at the moment because it really depends
Yeah.
on the resolution that we are going back to normal. And even if we have a resolution, it is said that, okay, we probably need a couple of months until we have that figured out because it's a lot of backup. Some of these facilities are damaged through the attack. So we have to probably need a couple of months to go back to normal when we have a resolvement, right? And we
Yeah.
saw it with the oil prices lately. We all feel it at the gas pump. But
Yeah.
why people are so nervous is not only that gas is going up. I mean, oil is in everything we
Mhm.
consume and buy every single day. It's unbelievable where oil is in, and if it's not in the product itself, it's somewhere in the supply chain and in the transport, which again is higher due to higher oil prices, and that certainly can influence inflation and can pressure inflation
Mhm.
overall the whole U.S. economy, but also global economies in the world, right? So
Mhm.
all of that is where the jitters are actually coming from the whole conflict because of
Right.
the region where it's happening and because of the importance of the global oil consumption and everything that we consume, it flows into that. So
Yeah.
again, oil prices, this is where it hinges on, and this is where we need a fast resolution as well.
Yes. Yes. I will say the clients we've had in the gradient energy portfolio have been very happy recently. But, when things get worked out and oil comes down to maybe $70 a barrel or whatever, obviously that could fluctuate. But when, like you said, when oil moves, like everything else is impacted, transportation costs, food prices, corporate margins, and ultimately inflation. Inflation is what central banks have really been fighting so hard to bring down. So, what do you think about that?
So the interesting thing is, coming into this year, the expectations for rate cuts, for interest rate cuts, because we were moving into the right direction, right? I mean, inflation
Hmm.
is still not back where we would feel comfortable at. I think everyone feels that, and still also
Yeah.
not where the Federal Reserve would like to have us. But we were moving pretty close to the end game here, right? I mean, we came down quite a bit the last 3 years when we
Hmm.
remember back over 9% after COVID, right? So we came down quite a bit to levels where it's getting a little bit better, and everything looked good so far, right? And so we're expecting 2 to 3 rate cuts. The markets love rate cuts, right? So that
Hmm.
was a good setup. Well, then the conflict started. And
Yeah.
all of these expectations went to zero. So that was very fast. Usually, expectations for rate cuts do not move that fast, but obviously, that was a major impact. That changed the narrative there. I would say at the moment, The expectations are for 0 rate cuts this year. Maybe one. I think it's not completely off the table, but
Mm-hmm.
probably later in the year, if at all, right? Again,
Mm-hmm.
we have to look for inflation reports, and now it's expected, even if we have a resolution quick, that it still, gives us a little bit more inflationary pressure over the last couple of months. We saw that last week with the consumer price index inflation report. We already saw some impacts there. So we will
Mm-hmm.
probably will look for that for the next couple of months, and all depends on a resolution if we will have probably a rate cut later in the year, if at all, or if they're staying put at the moment to just being able to keep inflationary pressures for the economy as contained as possible.
Great. Yeah, thank you for sharing that about the prediction on the rate cuts too. That was helpful. Well, I think when things feel uncertain like this, it's often a temptation to do something dramatic, sell, move, react. I know, some of us are more emotional than others with the stock market, but I've been encouraging my clients to, weather the storm. And it's hard not to make a quick decision when you do feel that anxiety. It's normal. But the best investors are able to control that, right? I mean, you're not making any major moves right now, are you yourself?
Exactly. I mean, it's like, as you said, it's all emotions, right? We are all emotional about that. We all are hearing the same news, the same uncertainties, the same concerns. At the end of the day, psychology is a lot of what moves markets in the short term, at least. In the long term, it's
Mm-hmm.
fundamentals and the economy. But in the short term, a lot of that volatility is just expectations of people of what might happen, right?
Mm-hmm.
I would say though, and what is interesting, because when we look at and hear the news, then we might think, oh my God, the markets are probably down dramatically this year. And what we're seeing, well, we're barely up, but we are up and we are positive, right? We just hit
I
another
know.
all-time high yesterday. So
Yeah.
it's a lot better than what we would think it is. And I think overall, when we have a financial plan, and I know you're doing such a fantastic job for your clients in
Oh, thank
planning
you.
their financial journey, right? And
Right.
a financial plan is in place for things like that, right?
Right.
Because at the end of the day, every single year, like we said before, there are concerns, there are uncertainty, they're named differently every year, but there's always something. We have volatility every year, we have a correction every year, even though
Yes.
the markets perform positively for the year. So a
Mhm.
financial plan, when well set up, it's there to weather this storm, right? So that we do not have
Right.
to make short term changes, right? And if we are well diversified and well set up, then you probably do not even feel that volatility all that much, because you are spread
Right.
across different asset classes, different things that might protect you from this volatility. That
Yep.
you do not even feel it and feel a smoother ride throughout. So that helps
Yes.
definitely when you look at your portfolio.
Yes, thank you. Yeah, a lot of our portfolios are, especially for people that are already in retirement, depending on their risk tolerance, they usually do have some balance to them. So they will have some safer buckets, earmarked for preservation to really help with that peace of mind in these seasons. But then we usually do still have a bucket of money really earmarked for aggressive growth with those stocks or gold or things like
Mhm.
that, just to keep up with inflation. So thank you. Yeah, I think a lot of our portfolios are already positioned to weather this type of volatility. And so it's really not about chasing opportunities right now. It's just really protecting resilience, I think. And like you said, staying focused on that long-term plan, right? As long as your risk tolerance hasn't changed.
Exactly, and you just mentioned it. I mean, what you can do in situation like this, where we have a little bit more volatility and market movements, is, hey, check your risk tolerance. That might have changed, right?
Right.
If you're comfortable with
Yeah.
the level of risk that you're taking, and usually times of volatility is showing you, are you actually comfortable with that
Right.
volatility, right? So
Yeah.
checking that. Then also rebalancing portfolios. You're doing a great job for your clients to stay on top of that. But
Mhm.
we had such great returns over the last 3 years. So
Mhm.
the risk and safe bucket might be a little bit out of whack. So bringing that to your risk
Right.
tolerance helps in situations like this. What we are doing in the back end, for example, is looking more, for example, growth stocks. That was what's driving market over the last couple of years. Now we are maybe looking a little bit more for value stocks, more quality stocks.
Yeah.
The The S&P 500, we always say the Magnificent Seven. That's a term we all heard and know, right? Tech stocks and all of that, AI and all of that was pretty
Mm-hmm.
the market over the last couple of years. Now we have the 493 others that are moving up and participating. So we have opportunity there. So we're making some small changes on the back end, but overall, I would say what clients can do and you can do: check your risk tolerance, rebalance your portfolio, make sure you're diversified, which you do anyways, for planning for your clients. And that's actually the best thing to do in situations like this, rather than making short-term decisions of
Mm-hmm.
being in the market or out of the market. Yeah.
Yes, yes. I love that. And it is true when we're doing our reviews. Sometimes the stocks have grown so much, or the gold, or the aggressive bucket, that now we look at it and do their risk tolerance quiz and we go, well, we've earned so much here. Now we do need to realign it and maybe position a little bit more on the safer buckets. And so I think a good rule of thumb is, if you feel like super worried about, a particular bucket going down, that could be an indication that maybe we do need to pull the risk back just a little bit. And you see that, like you said, in these times of volatility. Well, for those that have been watching the news, I know there's been a lot of talk about the shadow of a recession.
Hmm.
We can't ignore the word. It always lingers in moments like this. What do you think about that shadow, Lisa? Do you think it's getting closer at all?
So I think, yeah, the bad hour word, right? Whenever we
Yeah.
hear a little bit of a bigger uncertainty or concern, we always hear like, oh my God, is this finally the time where we will slither into a recession? And the interesting part is, after COVID, most of the major economies in the world went into a recession. The US did
Hmm.
not, right? And I think that speaks a lot of the resilience of the US economy. And we are still
Right.
quite resilient. When we look at the moment now, GDP growth, this is the high level view of how the US economy is growing, high level, then it's still expected to grow around long term averages, which is very positive. Then we see
Hmm.
inflation. Again, we have some pressures and about the conflict. But again, overall, we're moving into the right direction, very resilient. Labor market is resilient, right? Unemployment rate is very far away from long term averages, right?
Yeah.
So all of that is very, very resilient at the moment. US businesses
Hmm.
on the other end, right? How the largest US businesses do here, expected to grow their earnings double digits, very much high above long-term averages. Their profitability is at record highs, right? So despite
Hmm.
everything, and I just mentioned it, no discussion without the word of tariffs, right? I mean, it was the year
Yeah.
of 2025. We still have to think about it. It got a little bit on the back burner due to the
It
conflict.
did. It did.
So how U.S. businesses were able to weather the storm due to conflicts, due to tariffs and all of that, everything that was thrown at them, still very much resilient. So we do not see a recession on the horizon anytime soon. Again,
Good.
there's more pressures the longer it takes, right? The more
Yeah.
we have some high energy prices
Yep.
that certainly would change the longer it takes. But at the moment, I think we're in a very, very healthy spot to weather a storm. So we do not see a recession anytime soon.
Great. Great. That's great news. Well, now I want to transition into precious metals. Lisa, I know this is your forte. Lisa is the lead portfolio manager of Gradient Investments precious metals portfolio, which we have been using a lot, by the way, in the last few years and been very happy with. I know Lisa doesn't toot her own horn, but Lisa actually got the Best Portfolio Manager Award this past year for having, I believe, the best performance in a portfolio over a certain period of time. And I looked on Facebook, she had this really nice trophy and all these comments. And I said, that's my girl. She's so brilliant. I love her. So, Lisa, and I have to, before we get into it too. Can you tell our listeners, there was a time where silver really went down? I heard about this, and you
Mhm.
somehow timed it. Can you tell that story about what happened with that? Because I thought that was just so neat.
Yeah, definitely. So we had, I mean, gold best year since 1979 last year. Silver, absolutely phenomenon. Um,
Hmm.
the thing though is with silver, it went pretty much out of whack and a lot of momentum, right? And I always say,
Yes.
when people start at Reddit, for example, where they discuss investments with each other, a lot of younger investors, right? And when they discuss silver trades, no one really talked about silver before that all that much. And when they start talking about it, it's usually a sign that there's a lot of speculation in the market, that we are not dealing with fundamentals anymore. So there's a lot of a lot of momentum and speculation, and that we might see a shift there. So we decided we had a 25% allocation to silver in the precious metals portfolio, and we decided end of January to move out completely, to just take a little bit of risk off the table, lock in the gains, and then recoup, let silver correct itself, and let the volatility flush out a little bit, and then go back in. And actually, that was pretty good timing, because the exact next day, silver had its second worst day in history, falling 27%. So
Yeah.
that was the right timing. Again, obviously that was luck, right? So we knew, okay, we need to take some risk off the table.
Yeah.
Probably not going well anytime longer, but that it was exactly one day before was obviously
Yeah. I mean,
a
I
good.
have the chills right now. That is like so good. I call that women's intuition,
Yeah,
actually.
yeah,
I mean, that was amazing. I mean, who times it better than that? The
yeah,
day before a 27% drop, you get out
yeah.
of silver. I have to tell you that I just love that happened. And you're right, it doesn't always happen that way,
Mhm.
but you really saved a lot of our investors in that portfolio from losing quite a bit,
Yeah, yeah.
So great job with that, Lisa. You are amazing. We're so blessed to have you on the team. So, can you tell us now, just what do you think about gold? I mean, well, not everybody, a lot of my clients are saying, things are so uncertain right now. Should we just go to gold? I know it carries a sense of safety, history, comfort. Some people think it's like, immune to volatility, which I know is not the case. But what are your thoughts about gold right now?
Yeah. So gold, again, like is the ultimate safe haven asset, right?
Yeah.
For thousands and thousands of years. This is a lot of psychology as well, right? It's a hard asset. We can see it, we can touch it, and in times of uncertainty, it usually does well. And we saw that last year. There was also a lot of
Mhm.
uncertainty, geopolitically, policy. That was part of why it did so well for the year. What I want to say though, and I still like the fundamentals of gold very much. We have a lot of
Mhm.
central banks, global central banks, still buying gold, which is great. It puts a little bit of a price floor underneath it. We still have uncertainty around, which is usually very good for gold. We have interest rates, for example, right? We had expectations for interest rates coming down again, even though the expectations have moved a little bit. At least we are not
Mhm.
there where we raise interest rates, at least not at the moment, which is great for gold.
Mhm.
It's a non-yielding asset class. And then last but not least, we have the US dollar. Uh, Influences. A lower US dollar, which we saw much of last year, is usually good for gold because it usually trades in US dollars. So I think
Mhm.
overall, central bank spending is still strong. Gold is still under owned in a lot of investors' portfolios. Again, it was more on the back burner of minds for portfolio construction for quite a long time. And now
Mhm.
investors are getting back in, allocating a little bit of their portfolio to gold, to precious metals. And there's still a lot more investors that are doing this right now. So I would say the fundamentals are still great. I still like gold very much. It's less
Great.
volatile than silver. So the majority of the precious metals portfolio is gold at the moment,
Yes.
I would say. But as you mentioned, and I think that's very important to say here too, right? We always see gold as the safe haven, uh,
Mhm.
as a great diversifier, which it is. But it's also very volatile, like you said, right? So it can
Right.
be very volatile. We usually don't see it in gold that much, or see it the same as in the markets, but it can be still very volatile. So with that being said, it's a great diversifier in a portfolio, but we have to, take attention to that as well.
Yes, thank you for that. Yeah, I usually recommend that people put, 10%, really, I mean, no more than 20% of their portfolio in precious metals because the standard deviation or the volatility, like you said, is higher than the overall like S&P 500, unless somebody doesn't mind that volatility and they're just a real big believer. But usually what would you say? Do most people do like 10 to 20% as
I
far
would
as a
say yes, it's
diversification?
around that. It's 10, 15-ish%, so right in that alley, not too much of the portfolio. Again, and it's like it had a great phenomenal year, gold, silver, precious metals last year, the year before as well, and is expected to not do as good this year, but still perform very well. What we are seeing year to date, obviously still the best performing asset class after energy. But
Hmm.
it's again volatile. And it's again,
Hmm.
gold and precious metals are usually not there to make you rich, but to keep you rich, right? Because they have
Yeah,
different drivers, and different they just move on different situations in the market. They just move on different demand drivers, which can be
right,
fantastic to smooth out the ride of the overall financial journey of the overall portfolio. But it should not be too much because of the volatility you mentioned as well. But it
right.
moves on different things and can be a great diversifier and
Yes.
can be helpful for portfolio construction. Yes.
Yes. And I know in the past, not that past predicts the future, but in inflationary times in the past, I know gold has done very well. So if this Iran crisis doesn't get worked out as quick as we want and inflation goes up, I could see gold being a great diversification tool, especially in that case, right?
Exactly, right? Because the markets, equity markets usually do not like inflation very
Yeah.
much, right? And gold, again, this is like a great example of when gold is moving on different drivers and can be helpful for
Yes.
portfolio. Yes.
Yes. Well, I know you don't have the crystal ball, and you've talked a little bit already about this, but if you had to paint three pictures of the future right
Mhm.
now, what do you think it would look like in the stock market?
I mean, there's three scenarios that could come to mind. I would say, and this is likely where it's going right now, at least at the moment, is hey, we resolve the conflict in the Middle East. We get an ease of oil and energy. We walk through this, and then we inflation is again that's transitionary. What we see it the pressures there, and then again we are
Mhm.
going back to being able to grow the economy and businesses are doing great, markets are doing fine. Then there's another scenario where we're like, okay, we meander around a little bit longer with a resolution, and again,
Mhm.
um, oil prices stay elevated. We have a little bit of an inflationary pressures that certainly could be a little bit more ups and downs, a little bit more volatility in the market as the market is figuring it out and how businesses are dealing with different supply chains, different input costs of higher oil. And then there is a scenario which we also have to talk this scenario that is the worst case scenario, so to speak, where we really see a move back to escalation. They're not talking to each other
Mhm.
anymore, which again could dampen economic output at least. And again,
Mhm.
it comes back to oil prices. This is the wild card at the moment. This is what we are watching closely at the moment if we have to make any decisions in portfolios. But at the moment it more looks like a resolution of the conflict. But this is the market overhang at the moment. I would say that's around that, surrounding that, and oil prices.
Yes, yes, we've got to keep an eye on those oil prices for sure. It is nice that we're seeing some hope though with them getting together. I know this past weekend the deal didn't exactly happen, but just the fact that they are getting together and talking and communicating, I think is
Mhm.
at least a step in the right direction. So we
Mhm.
don't know which one of those scenarios though that we're really talking about. So I think that is the human reaction is to feel a little bit of uncertainty. So really appreciate you bringing your wisdom to that
And I
for
think,
sure.
at the end of the day, like we said a couple of times now, hey, we are in a very resilient spot and we are starting from a very healthy basis when it comes to the economy and the businesses operating in it. So I think we are very well set up to weather the storm there.
Yes, well, that's very reassuring. And I thank you for the clarity, honesty, and just your calming, beautiful voice in the storm. So thank you so much for joining us today. We so appreciate you, Lisa, and you do a phenomenal job with the portfolios for our clients working together.
Thank you so much for having me.
Yeah, you're welcome. And to everyone listening, I just encourage you to take a breath. The headlines will keep coming, but your strategy doesn't have to change with every single one of them. And I know it's hard not to let those emotions take over and make a quick decision. But if we can just put some space between the emotions and the decision and just trust and have faith, like Lisa said, things are looking a little more optimistic with this. And we are watching it like a hawk as your advisor and investment team. And we will keep you updated. So thank you everyone for joining us today on Retirement Today. And if you haven't subscribed to our YouTube channel yet, go out to YouTube and you can type in Beacon Wealth Advisory, hit subscribe, and then that will update you every time we have a new video out, and you can listen to this as well. But thank you so much for joining us, and we'll see you next week on Retirement Today.